Today's 800-point plunge on Wall Street is just the most recent swerve for a stock market that had very recently been hitting record highs. Jeffrey Brown reports that the high level of volatility has investors large and small on edge and looking for answers.
President Trump's trade and tariff wars, major slowdowns in the economies of Germany and China, the prospect of further actions by the Federal Reserve, and more. It may be August, but national and global events are impacting markets and maybe the economy overall. Neil Irwin, senior economics correspondent for the New York Times, joins me now. Nice to have you back.
Thanks, Jeff.
Big drop in the market today. You see several things going on. Let's start with the trade and tariffs. How is that moving markets?
Sure. So we've seen a bit of a de-escalation in the trade wars in the last couple of days, as the president has kind of backed away from one round of tariffs that were set to go into effect.
Which should be good in a sense.
It should be good,
yeah.
but you remember, that was only partially pulling back something that was only announced 2 weeks ago. What we're seeing is that this trade war, it's something bigger than just one little dial that you can twist. It's infecting the overall economic relationship between the world's two largest economies. Businesses worldwide are having to adapt and adjust, and they're nervous about making investments and really investing for the future, given that backdrop.
Do we see actual damage already, or is this more about fears looking ahead?
So far in the U.S. economic data, it's pretty mild. You see some evidence that the industrial sector is slowing down. Business investment has been weak in the last few months. But it's not a catastrophe so far for the U.S. economy. So far, the U.S. economy seems to be holding up. The question is, what's going to happen in the future?
And when the president pulled back yesterday on the latest tariffs, or at least postponed them, was that perhaps seeing that this time it might affect consumers, or why do you think he did that?
Yeah, I think this round of tariffs is going to affect consumers 10% on basically all Chinese imports, including toys, including iPhones, including things that people are buying in the Christmas season. They didn't want to do that. The thing is, you can't really go back again. Sometimes this idea of constantly escalating global economic warfare, once that gets in place, it's not so much the details of any one tariff, it's what's going to happen to that relationship overall. What does that mean for the future?
All right, so there's that on the one hand, but you're seeing something that's part of something much bigger, deeper, a slowing, a weakening, perhaps even signs of a recession. What points to that?
So the biggest thing is what happened today is called an inversion of the yield curve. So the yield curve is the interest rates on Treasury bonds for different durations, different time periods. And what's happening now is you're actually seeing lower interest rates on longer-term bonds than on shorter-term. All that means is investors worldwide seem to be pricing in and expecting slower growth, weaker growth, lower inflation, more Federal Reserve rate cuts. That's a pessimistic signal we're getting from global bond investors.
And where are they seeing that? I mean, what specifically are they looking at that's making them feel so pessimistic?
It seems to be these global forces, not just the trade wars that we already talked about, but a sharp slowdown in the European economy. You have geopolitical tensions. You have tension between China and Hong Kong. You have a very complex situation where the entire world economy and the world political system seems to be in this very fragile state, and so it doesn't take much to undermine growth.
Now, the president clearly seeing what's going on. He put out another tweet today, another blast at the Fed chairman. He referred to him as clueless Jay Powell. What is that coming from, or what are you seeing there?
So look, President Trump wants to blame the Fed for everything bad that's happening in the world markets and the economy. And it is true that, look, the Fed raised interest rates 4 times last year. They've already taken back one of those. They seem to believe that there is some evidence that they overdid it last year and maybe raised rates too much, given where the global economy is. But you can't hold the Trump administration blameless. They keep kind of throwing bombs into different elements of the global trading system in ways that are disruptive. And you talk to CEOs, you look at corporate earnings reports, there's clear evidence that the Trump administration has part of the responsibility.
I mean, we've talked about this before and over the years many times. The uncertainty unsettles markets, right?
Yeah, if you're a CEO, you're trying to decide whether to invest, whether to hire people, whether to build a factory. You look around, you don't know what the world economy is going to look like in a year because there's this kind of chaos that emanates from not just Washington, from other world capitals as well. That's a very difficult setting in which to do business, and what's happening in markets is reflecting that more and more.
It is still true, though, that some numbers look okay or even good, right? Job market's still okay, wages are up. So everybody's sort of parsing all of these numbers, huh?
Yeah, look, so far the U.S. economy has been the calm in the storm. The U.S. economy has been basically sound, even with all this turmoil overseas. The problem is what we're seeing in markets this month seems to be suggesting that could change. And it doesn't have to be a recession. We can still avoid a recession, but the risk of one is a lot higher than it was a month ago.
And just briefly before we go, what is it about August? Something about everybody's supposed to be relaxing. but a lot of things happen in the economy and markets.
We keep seeing this happen in 2011, happened in 2007, happened in 1998. One explanation, it seems to be that a bunch of traders are on vacation, so there's less liquidity in markets. You get wilder swings. Maybe it's just a coincidence, but I think we've seen this pattern before where August is a month where global markets really seem to melt down.
All right. Neil Irwin of the New York Times. Thank you very much.
Thanks, Jeff.